This video will walk you through the solution to exercise 18-8, which involves calculating basic and diluted earnings per share. Here's the data for this question. Etnic Inc. reported net income for the year ended December 31st, 2025 of $400,000, and there were 60,000 common shares outstanding during the entire year. Etnic also has two securities. It has 4% convertible bonds purchased at par for $100,000, and each $1,000 bond is convertible into 25 common shares. The other security is a $20 cumulative convertible $100 par value preferred shares. Each preferred share is convertible into 10 common shares, and the total paid is $50,000. Both convertible securities were issued in 2021, and there were no conversions during 2025. Using the residual value method, the liability component's present value of cash flows for interest and principal at a market rate of 5% for non-convertible bonds was $97,277. The equity component was for the remainder of $2,723. Etnic Limited's tax rate is 24%. There are two requirements for this problem, so we'll begin with requirement A, which directs us to calculate EPS, including required disclosures for 2025. Well, the first thing we want to do is calculate the basic earnings per share, or EPS. The formula for that is net income minus preferred share dividends divided by the weighted average number of common shares. For this question, this is pretty easy. The net income is $400,000. We'll deduct the $10,000 in preferred share dividends. This results in a numerator of $390,000, and then we divide by the 60,000 weighted average number of common shares outstanding. This results in basic EPS of $6.50. Now that's just the basic EPS, and we're not done here. Since we're directed to calculate the EPS including all required disclosures, this means we must also calculate the diluted earnings per share. So after calculating basic EPS, the next step towards calculating diluted earnings per share includes determining the individual impacts of each of the convertible securities and then ranking them. So let's deal with the 4% convertible bonds first. If those bonds are converted into common shares, the company will no longer have to pay interest on those bonds. Therefore, the interest is saved, and a savings in interest actually increases the net income, which is available to the common shareholders. So if the present value of the bonds, as given in the question, is $97,277, and the market rate of interest is 5%, and we multiply by 1 minus 0.24 to determine the after-tax impact, this results in a net after-tax savings of bond interest of $3,697. Now, if those bonds are converted, they will add additional shares. So if the total face value of the bonds is $100,000, and each bond is valued at $1,000, this means that there are 100 bonds outstanding. And if each bond is convertible into 25 shares, that means a total of 2,500 shares will be added. The individual impact of the interest savings is calculated as the total interest saved of $3,697 divided by the 2,500 additional shares results in an individual impact of $1.48 per share. Now, to determine if these convertible bonds are dilutive or anti-dilutive, we compare the individual impact of $1.48 to the $6.50 basic earnings per share. Since $1.48 is less than $6.50, the convertible bonds are dilutive. If the individual impact was more than the $6.50 basic EPS, then the bonds would be considered anti-dilutive and we would ignore them from this point forward. Now let's look at the $20 convertible preferred share. If the preferred shares are converted into common shares, that means the company will no longer pay dividends on them. The dividends saved will get added to the income available to the common shareholders. So the total dividend saved is $10,000, and this is calculated by determining the number of preferred shares multiplied by the dividend per share. If the total paid-in capital for preferred shares is $50,000 and their par value is $100, this means that there's actually 500 preferred shares outstanding, and if they pay a $20 dividend, that results in $10,000 in preferred share dividends. Now, of course, if those shares are converted, that will increase the number of common shares. So if there are 500 preferred shares and each preferred share is convertible into 10 common shares, that adds an additional 5,000 shares to the pot. So the individual impact is the $10,000 in dividends saved divided by the 5,000 additional number of shares issued. This results in an individual impact of $2 per share. If we compare this to the $6.50 basic earnings per share, $2 is less than $6.50, therefore the preferred shares are dilutive. Again, if the individual impact was greater than the $6.50 EPS, they would be anti-dilutive, and we would then ignore them. Now that we have determined that both of these convertible securities are dilutive, we have to rank them. Ranking them will help us determine the correct order to include the dilutive securities in the calculation of the diluted earnings per share. This is a very easy process. Lower individual impact values are ranked higher than others. So of the two, the convertible bonds have an individual impact of $1.48 versus the $2 individual impact of the preferred shares. Since the bond impact of $1.48 is the lowest, we'll rank that one number 1, leaving the preferred shares to be ranked as number 2. Now on to calculating the diluted earnings per share. The simplest way to do this is with a quick table. We have a column for the item, we have the income or the numerator, the number of shares, which is the denominator, and the individual EPS effect. So let's start with the basic EPS. We know that the income available is $390,000. There were 60,000 shares of the denominator. That's what resulted in the $6.50 basic EPS. Since the convertible bonds were ranked number 1, we're going to include those next. This adds $3,697 to income and an additional 2,500 common shares. The next step is very important. We calculate a subtotal. So to this point, when we take the basic EPS plus the savings and bond interest, our subtotal is $393,697, and the number of shares is 62,500. We divide the numerator into the denominator, which results in $6.30. As long as this number is less than the previous number, in this case the starting point of the basic EPS, we know that the bonds are dilutive. If this number were to end up above $6.50, the bonds would either have been anti-dilutive or a mistake was made. Now we'll factor in the convertible shares, which adds $10,000 to the income, or the numerator, and 5,000 shares to the denominator. We'll create our final total, since there are no more dilutive securities after the convertible shares. This gives us an ending income or numerator value of $403,697. The number of shares would be 67,500, and when we divide the income into the number of shares, this results in a diluted EPS of $5.98. Again, this number is lower than the previous $6.30, so we're okay. For the required disclosures, we simply have basic earnings per share of $6.50 and diluted earnings per share of $5.98. And we're finished with this requirement. For requirement B, assume that Etnic also reported a discontinued operations gain before tax of $20,000. We want to calculate the EPS, including the disclosures for 2025. So we want to recalculate what our income from continuing operations is, discontinued operations net of tax, and net income. We know our net income is $400,000. We know that the gain on discontinued operations is $20,000 before tax. So if we multiply that by 1 minus 0.24 or 0.76, this results in a gain of $15,200, which means that the income from continuing operations has to be the difference between the net income of $400,000 and the discontinued gain of $15,200, or $384,800. And just to be double sure, make sure you double check by going from top to bottom. $384,800 in income from continuing operations plus the $15,200 net of tax gain on discontinued operations should equal the net income of $400,000. So now we'll calculate basic earnings per share as net income minus the preferred share dividends divided by the weighted average number of common shares. The only difference in this case from part A is that our income from continuing operations has changed. So we're going to use $384,800. We'll deduct the $10,000 in preferred share dividends, and then we divide by the 60,000 weighted average number of common shares outstanding. This results in basic EPS of $6.25. Now that we have a new starting EPS number, we'll go back to recalculating the diluted earnings per share. We do not have to go through the ranking process again because we've already done it. That information hasn't changed. So we'll start repopulating our table again. Our starting point is the basic EPS from continuing operations. One of the most common mistakes students make is by starting with the EPS from net income if there is continuing operations. So our starting point is $374,800 divided by 60,000 shares is $6.25. That's the basic EPS. We now add in the convertible bonds. This adds $3,697 to income and 2,500 shares. Our subtotal, $378,479 divided by 62,500 shares. results in diluted EPS after factoring the bonds of $6.06. This is still less than the beginning 625, so we're okay. And now the preferred shares, where we add back the $10,000 in dividends saved and 5,000 shares. This gives us a final total of $388,497,000 in income. When we divide by 67,500 shares, this results in diluted EPS of $5.76 after factoring all dilutive securities. This is still less than the previous $6.06, so we know we're okay. For the required disclosures then, we now have two columns, one for basic EPS, one for diluted EPS. We know our income from continuing operations for basic EPS is $6.25 and $5.76 on diluted EPS. For the gain on discontinued operations for the basic EPS, we take the $15,200 after-tax discontinued gain divided by the 60,000 shares. This results in 25 cents. And the sum of the two results in basic EPS on net income of $6.50. For the diluted EPS, we take the $15,200 discontinued gain and divide by 67,500 shares to end up with 23 cents per share. Therefore, the diluted earnings per share on net income is $5.99, which is the $5.76 on continuing operations, plus the 23 cents on the discontinued operations gain. And that's it. We are finished with this problem.